long-term bonds because of the interest rate risk. International bonds were, starting to de-emphasize, although the yields are still good right now. And, just any type of intermediate type of bond, especially the higher quality. Actually, you'll be incented to take a little bit more risk on it. Sowing seeds is those areas that we think, either taking a particular emphasis right now, or we've been slowly building up over time within the portfolios to, emphasize a little bit more. And so international stocks, because of the valuations, are a little better than the U.S., give you a little more defensive nature and a potential for more gain. Emerging markets have kind of been on the table, off the table. Definitely a lot more volatility in those areas. In China, when they really slow, but kind of hard to ignore them. We'll talk more about fixed income alternatives here in a second. But bank loans, and that's floating rate funds, and we probably all emphasized them for the last 3 years. Loan funds that have variable rate loans to them, so that if rates go up, we get paid a little bit more. A particularly good area. So here's alternatives, and if you're with us, you've probably heard of all of these. Bank loans I just talked about, really floating rate funds. John, not here? Slipped down. So John's company, Franklin Square, was one of the first to really bring these business development corporations to the market for every investor. To find a more liquid version of those versus the private investors that were doing these. And I'll show you a slide on those in a second. But essentially they're raising money to lend money to small, mid-sized companies, right? Privately held companies, and doing that on a variable rate basis. So again, they're incented, they're paid more if rates go up. Been a particularly strong area. Real estate investment trusts, as I mentioned.